The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we officially kicked off the month of August with Tuesday's trade action, and we saw a much quieter day in the grains and oilseeds, at least in the case of corn and soybeans. We'll call it a stable day compared to what we saw Monday to kick things off. Wheat, a little more pressure there. A lot of things that we want to discuss and take a look at how much damage has been done to the charts and more. Joining us today with market analysis, we welcome in our good friend Brian Splitt with agmarket.net. Brian, it's great to catch up with you again, my friend. I hope you're doing well.
Yeah, doing great. Good to be here as always, Jesse.
Well, Brian, just as I kind of alluded to, a much quieter day on Tuesday compared to what we saw on Monday. Even Soy Complex even found a little bit of support late in the session, with corn down slightly. Overall, though, just it's been another volatile couple of trading sessions here, and it largely feels like we've stopped this recent weather rally or just overall rally in the grain markets. Would you say that's maybe the case here, Brian?
Yeah, I mean, a pretty quiet news day. When you kind of think back over the last, let's say, week and a half, we had corn with a rather tremendous rally, that typically when the market makes its high, which we saw in June, this was a pretty strong secondary rally. And so I think it failed at some pretty major key technical spots. I mean, you had 62% retracement of the break from the June high to the July low. Your 200-day moving average was right there. The kind of that old downtrend from the contract highs made last summer to the fall highs, we tested that, and we just got right back into that zone from the highs from the March quarterly stock and planning intention. So there's about 4 different major technical things going on at the highs that we failed at. I think a lot of that move, I mean, you had kind of the early portion of that was driven by the forecast of heat, which, the market kind of died down as that heat was here. So especially in the beans, if you'd have sold the hottest day of the year, you probably caught the highs within a day or two on the bean market that just broke $1.10 off the highs in a short period of time. You got wheat. That was another part of the news cycle. We had the Russia-Ukraine story, which, all these, it's hard to know how long that stuff lasts, but it seems like anymore with this Russia-Ukraine, if there's any kind of a headline, maybe it's like a 2-3 day event. And then it kind of dies out. And here we are. I mean, you had KC wheat. We're starting the month of August trading within a nickel of the July lows. And those lows were within a dime of the June lows. And those lows were within 15 cents of the May lows. So big picture, KC wheat's down at the low end of its chart. If you're somebody that needs to be short wheat, you probably could switch to a more conservative approach to that just because of where we are and where we just were. That's about a $1.40 break in wheat from the most recent peak there. So it's definitely been something for everybody in the market recently.
Very true. Well, and I think in the case of corn and wheat, they've been the most tied together here, whether it's the Russia-Ukraine situation or we think about some of that heat and dryness that we've had across the Corn Belt in the case of corn. Overall, it feels like those two markets have been linked a lot more, while soybeans have kind of been off doing their own thing, and there's different fundamentals and technicals there in the soy complex that we could talk about. But corn and wheat seem like they've been a little more intertwined here the last month or so, Brian.
Yeah, and if anything, I think you could point out a lot of sessions if you just went back and looked where the funds, especially on a quiet news day like today, where the funds are buyers of beans and then sellers of corn and wheat. And then there's definitely days where it's the opposite of that. Corn had a little period where it was following beans on weather. Then it got a little last gasp on the wheat with the Ukraine story. Definitely, it's hard for corn to maintain strength when wheat breaks as much as it does. And I think the bean balance sheet, as you had alluded to, is just different than corn. I think the trade is expecting the corn yield to drop further in the August report, but the balance sheet can handle it. Where if you take a bushel or 2 bushels off of a bean yield in August, then things look a lot different. So I think the bean market's probably going to be a lot slower to really break down, and it's going to require very good weather in August to maintain pressure. And one thing that we've seen is, you think back to spring, we kind of had a period where there were some cancellations from China, and then it was like nothing from China for a while. And then over the last week, we've actually had China step back in, and the totals aren't that impressive, but it's just the frequency that we're seeing where we're at least getting some of that export business. And the bean pace of sales definitely has a lot to be made up.
It almost feels like it's a psychological boost to the soy complex seeing China get back into this market. Like you said, the totals aren't that impressive, but just the fact that China is back in here buying some U.S. soybeans, that coupled with the tight balance sheet and the fundamentals there seems to be a psychological sort of win for this overall soy complex, Brian.
Yeah, we really just haven't gotten that demand to show up in corn. I think ethanol right now is going to continue to be the bright spot for demand, and that should continue to do so, especially as we look at the recovery that we've seen in energy values. We've been able to see crude oil recently poke its head above 80 and stay there. The last couple times we've gotten these levels, they've really smacked crude oil back down in the mid to upper 60s. So just the fact crude oil has been able to maintain some of this short-term strength. You've got unleaded gasoline and heating oil, the RBOB and the heating oil. Those have been strong. So you have that good component, for the corn for ethanol. It may be one of those things where you go back to like the beans, for example, and the big Brazilian crop, and it's taking China longer to show up again because they've got more South American beans to digest before they need to come here to buy our beans. So it's kind of elongating the timing. And I think it's going to be similar where in corn, last year we had a rough safrinha crop. This year it's a good safrinha crop. So again, that may delay China from coming back into the U.S. corn market for a while. Now, I do think if there's any quick ship needs and they need it, 30 days out, they're going to come to the U.S. for that. The Brazilian lineup for boats leaving their country is just too jam-packed to get any more business out of them. So that's maybe something where we could see some of these little flash sales here and there.
Well, Brian, thinking as well just about China, I know we had some somewhat disappointing economic data out on Tuesday to start off the month of August. And I know when you talk about energies and crude oil, maybe, kind of a canary in the coal mine type of situation. But, obviously that can get tied in with China. And if their economy is not doing great, if they're not consuming gasoline over there like they should be, crude, et cetera, those are just some outside factors I feel like we have to keep an eye on and pay attention to with how it's going to affect our markets here moving forward, Brian.
Yeah, it's hard because you don't know how the market's going to see that stuff. So there's been talk about, some stimulus in China. So do you pay attention to the economic data that's already happened, or is that poor economic data a reason to expect further stimulus, which could then get things going more, right? So, it's like the chicken or the egg. Which one is it? I don't know. But you're right. I do think energies are going to be a good canary in the coal mine as far as just general commodity sentiment. And if we've seen a couple markets that looked like they were going to try and break out to the upside just to kind of roll over again when it looked like it did. And so we got to watch for crude oil here as we get into the low 80s. If we start to kind of jab through some of these previous monthly highs and then it rolls back under 80, that's not going to be a good look. And you're probably going to see another wave of selling come in. But hopefully for the bigger picture, and bean oil is something else that has a very good correlation to crude oil. So with the continued strength here in crude oil, we've seen the soybean oil trade very strong off of recent lows. Again, that's just going to be pointing towards the renewable diesel initiatives we have moving forward and the expectation of further demand from our crush industry domestically.
Yeah, very, very true. With the case of these markets overall, weather, of course, we're watching that. The forecast is looking wetter, cooler here for this first part of August. But should that forecast not entirely verify, right, I have to think that some weather premium could get thrown back into these grain markets pretty quickly.
Right. I mean, you never know when you wake up one morning and that back part of the extended models starts to go hot dry, right? And maybe they don't get excited about the first day, but then, especially if it stays there and starts to creep into the 6 to 10 day forecast, they're going to take note. So, these models can only see so far. We're going to continue to argue about which model is better than the other, the GFS Euro. I think most of these guys are leaning towards the Euro being a little bit better performer this year. But you're absolutely right. I mean, August is critical for beans. Not to say it's not important for corn, right? We're filling out kernels. We're going to see kernel depth. Test weight's going to be affected by how we finish out this crop. But the bean crop is made right now, and if we could get some good rains especially after all the stress the bean crop has dealt with the last few weeks, some rain at the right time is going to do wonders for that crop. But vice versa, if we don't get rain and it does turn hot and dry, then you're going to see the size of the bean affected by that, the moisture content. So these are all things that are going to affect the market, and why you're probably going to continue to see a decent amount of volatility over the next several weeks.
We are having a conversation today with Brian Splitt from agmarket.net here on Market Talk. And Brian, just real quick to kind of wrap our grain discussion here. I've heard from a few farmers kind of that same old story that we've heard time and time again, saying, oh, well, I watched it rally and I didn't pull the trigger, got to a level that I originally said I wanted to sell at, and then I didn't sell because I thought it was going to go higher, and then it fell out from under me. In fact, a friend of mine in Iowa just was texting with me about that here last night. So thinking about, one day doesn't necessarily make a trend, but obviously these grains have pulled back. Give us some thoughts, just that reminder of risk management here and trying to not get emotional in these markets. I feel like just watching where we were and now where things have gone back to, yeah, another rally could happen, but you just got to be smart about your risk management here, Brian.
Yeah, I mean, look, there's numerous different ways to do this, right? So if you feel like, hey, I've had this target, maybe it was 570 on corn and we got there and you're like, wow, this feels really strong. I don't want to sell it here. Well, sell it and buy a call, or, buy a put, do something, right? Because even if you're not short for 100% of the move, you're still picking up something. This market has been volatile. It's offered you opportunity to catch some moves here and there in both directions. But what I don't want to see happen for producers is for that type of thought process to become habitual, because you start doing that every marketing year and it's going to be a rough career in marketing. If you can kind of build that mentality of staying disciplined and taking action where you tell yourself you're going to, regardless of what that action is, do something. I think starting that habit and doing that year to year is going to offer you much better success over the long run.
Brian, let's talk livestock. And you mentioned this to me before we came on the air today. Midday box beef prices soaring higher, and you look at a cattle market that had a pretty robust day on Tuesday. And I had mentioned to you, obviously, the sentiment of cheaper feed prices in here too. But I think largely to your point, that box beef number really seemed like that was a key support underneath both facet feeders on Tuesday, Brian.
Yeah, it's, you think about yesterday and you had, corn and beans and wheat all down sharply, and cattle were just like, knock, knock, is this thing on? And, then all of a sudden you get the box beef trade and corn's down 4 or 5 cents, but things, really take off. So, we're still waiting for some solid cash trade to develop to see what that does, but we've got board under cash here. So that could be another reason to see some continued strength. It looks like, you had a little bit of a reversal last week prior to that cattle on feed. We've seen a few of those along the way in this uptrend where you make a new high and then kind of reverse lower on the day. That's been generally good for a few days of a pullback, but we went down, we tested some trend line support on live cattle and it held, and here we are, pushing through yesterday's highs and seeing some good buying. So I think with today's close, they're probably going to try and buy a dip tomorrow morning if that develops, and see if we can't run this thing a little bit higher yet.
Well, and you mentioned cash country, and I know last week we didn't get a whole lot of activity in feedlot country, and I know we saw an early sale on Monday afternoon in Iowa. Nothing to set a trend for the week, but have to think that there's got to be some more activity here as we get into the month of August officially. Brian, when after last week's low totals, there's got to be some feedlot activity coming in here this week.
Yeah, right. It's the beginning of the month. It's early in the week, so we'll see. Who blinks first here. But I think cash, higher cash trade is needed in order to kind of keep this train going. It has felt tired at times, so it's something to be mindful of. Options are trading at very low levels of volatility. I mean, I was looking at some feeder cattle puts today out in like September, October that are trading at 10% volatility. So you can actually get some pretty decent floors under this thing. One thing I would maybe think about is you look at like the continuous chart for feeder cattle, which is always showing the front month at any given time. And, we did take out those highs from what was that 9 years ago. But kind of the same type of bar that we had for the month 9 years ago when that high was made. And then we had a correction that I think ultimately went down to like 193 before the feeder market got another secondary bounce. I think this is one of those things where we're getting into the second half of the year for the financials. There's a lot still going on there. I think that's probably going to continue to be your biggest risk for cattle is some kind of a more of a macroeconomic sentiment that just wants to pull money out of the marketplace. And so you got to pay attention to equity trade. If you start to see any chinks in the armor there, that could be something that could affect the live cattle and the feeder cattle market. So I just think it's good, prudent thing to keep puts under the market at this point.
Yeah, good thoughts there. Sometimes look at history to maybe give you an indication of what could happen in the market. Brian, too, cattle have gotten a little choppy, a little tired, as you mentioned here lately, but feels like maybe we took a pause in cattle and that's let us do some buying in the hog market. I know a slightly lower day in hogs, and some of the deferreds are having a little bit of a struggle with the Prop 12 worries and trying to figure that all out, but front month still, I mean, 103 hogs in August, pretty lofty number there, Brian.
Yeah, and I think, if you were going to ask me for one market that I thought could get squeezed going into expiration, it's that August hog contract. There's what looks to me like a head and shoulder bottom, or what some would call an inverted head and shoulders. And the measurement on that thing is up around 114. So there's not a lot of time on August options. There's a couple weeks here yet, but if that thing got scooting, there's some calls there that are actually pretty decently priced that are somewhat cheap to be very close to the money. I'd much rather buy a call and have $1.50 or $2 a risk than just try and buy futures here and hope for the best, right? So I think there's some decent risk reward plays there.
Well, Brian, before we wrap it up today as well, you mentioned this in passing here earlier, and I just want to touch on this as well. The upcoming WASDE report for the month of August here. It's coming up in a couple of weeks, but still, I think worth mentioning just because of the fact that outside of any sort of news headline, that's pretty much our next milestone in front of us here for the commodity and livestock markets, Brian.
Right. So minus some kind of a headline on Russia, Ukraine, more attacks, more port disruptions, whatever it might be. The next major fundamental input is going to be that report. So I do think the trade's going to be looking for yield adjustments lower in corn. They did an early adjustment in the month of July for corn, rightfully so. I think the trade's expecting to take it down more. I think we're pricing in something that or have priced in a lower number than 177.5. Yeah. So that's where you have to be careful because maybe we do get a 174 or 175 or whatever it might be. Have we traded that number, right? That's a lower number than last month, but I think the trade has already worked that into the balance sheet. I think probably a bigger number to really pay attention to is going to be the bean yield. They did not touch bean yield in July. I think August is going to be something where they really have to think about what they're going to do there. That balance sheet just cannot handle a 2-bushel drop in yield like the corn balance sheet can. So I think you're probably going to see quite a bit of movement leading up and after that August WASDE report for the soybean market. Beyond that, demand is still a forefront of our concerns right now, especially on the export side all around. So we'll be waiting to see if, for corn, for example, maybe they trim yield a little bit, but maybe they do a further trim on demand. You still have, 805 million bushels higher demand year over year for corn. About 400 of that's the feed residual category, which is kind of a slush category, but feed is part of that. And just the amount of animal units on feed, that could be another category where they start to chop into that. That demand number looks rich to me.
Brian, always appreciate the insight and market analysis. And I know you and the team there at agmarket.net have a lot of great resources. If folks want to reach out, phone call, website, the app, a lot of great ways to get in touch, isn't there, Brian?
Yeah, so you said reach out, phone call 815-665-0463 is the direct line, 844-4AgMarket is the general line. Website, www.agmarket.net. You can sign up for a few-week free trial of our intel. And the app is agmarket.app.
Brian Splitt with agmarket.net. Always great to have you on the show. Have an awesome week, and we'll talk to you again soon. Thanks so much.
Yeah, thank you, Jesse. Appreciate it.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.